Well, the central theme of my individual project for the MBA was the aftermath of the crisis and how that impacted the financial industry. And so, against the onset of the onslaught of the financial crisis, there was a need for a more ethical, fair component in finance. And so that really raised the awareness for Islamic finance as an ethical option to the conventional banking system. And what my IP actually found was that a lot more institutions were now starting to tap the Islamic banking industry. And so more and more conventional banks were setting up Islamic banking windows, markets that were unconventional in Islamic finance, markets in Europe, in Eastern Europe, in Asia, like Japan, China, and Korea, were now exploring Islamic finance on a more robust level because it allowed them access to a new pool of investors where liquidity was still abundant, where credit markets were very much open and ready for business, and where there was a huge need for infrastructure financing. And so Islamic finance filled in that gap very nicely. And so the crisis really brought to the fore the need for an alternative financial mechanism, a financial system that is fair, that is equitable, that emphasizes the reallocation of resources and financial inclusion. But some of the other challenges that came through in the study of financial markets in the aftermath of the crisis were really related to financial hubs as well. So markets that had a deep exposure to a variety of products, unbridled innovation, were markets that were more impacted from the crisis. And those markets saw an absence of Islamic finance. So basically these markets were not regulated in a way which would allow the participation of ethical finance, for instance. And so that was a very interesting outcome of the IP. And so what it really links back to is actually the role of regulation, in that the role of the regulator is to provide a solvency in the market, to provide stability in the market, to ensure that banks are able to compete on a level playing field whilst whilst protecting the interest of the consumer. And so jurisdictions that did not emphasize that regulation saw a much more detrimental impact to their local economy than jurisdictions that had a much stronger presence in terms of regulation. Well, London basically announcing its aim to be a hub in Islamic finance will most certainly see a lot more participation from Islamic banks and financial services industry in London itself. So yes, there will be more participation from Islamic financial institutions across a broad spectrum of Islamic instruments, from sukuks to takaful, Islamic insurance, to Islamic fund management, Islamic equity products. So it certainly does put London in a very prominent position. Well, the Islamic financial industry has grown very robustly in the last 10 years or so. And for an industry that is still fairly nascent, those growth rates have been quite impressive. And so the declining profitability or the correction in growth rates that we are witnessing is perhaps a temporary blip due to various factors. Firstly, there's increased competition in the market now, not only from pure Islamic financial players, but also from the conventional market. And as competition increases, market share does decrease. The other issue could also potentially be size. There are a few Islamic banks that are large scale banks that are able to leverage on their scale. But the majority of the industry comprises of 4 small to medium-sized Islamic financial institutions. And so size matters in the financial industry in terms of efficiency and product innovation and distribution channels. And so size is extremely important and is perhaps one factor. So the larger Islamic banks will continue to gain market share in their domain markets and in new markets, whereas smaller Islamic banks could potentially see M&A activities where they consolidate and become larger institutions to gain more prominence in the market. Well, the other challenges that could perhaps contribute to the slow growth in the industry or the declining profit margins could also be attributed to regulation, for instance. So some markets are a little bit more aggressive in terms of regulation in incentivizing the market, whereas other markets aren't. And so regulation plays an important point when it comes to the growth of Islamic finance. And more importantly, the cost structure of the industry is also a pivotal point, in that cost-to-income ratios of most Islamic banks in the industry are substantially higher than their conventional peers. And so that is a function of transaction cost. It is a function of operating in a market that is perhaps a little less efficient in Islamic finance than it is in conventional finance. And so all these factors will contribute towards a redistribution model for Islamic banks to take Islamic finance industry into the next stage of growth.